Lincoln National Corporation. Not just wonderful because of the name that I share with it. So look, as we can see from this fast graphs price chart, there has been an absolute collapse in earnings, and we've seen the prices trend along with that. But is this a good time to buy, or is this a time when we should be running scared? So it has a BBB+ credit rating, it has a long-term debt to capital of 70%, but it also has a dividend yield here of 5.4% and a track record post-GFC of steadily increasing those dividends. Let's get into it. So when we are beginning to think about the future prospects, we need to be aware, obviously with the recent collapse in earnings, there's going to be a little bit of weakness there. Now the expectation is in this financial year 2023 there will be an increase in earnings. Now what that means is we've seen the earnings become still weaker over the last 6 months, but not completely collapse as we've seen with the 2022 earnings over the last 6 months. So here for 2023 the earnings estimates have come down quite a bit, but they're still looking relatively strong. And then in the 2024 year, again, they've come down quite a bit, but they're still looking like there will be an increase. So, what does this mean? Well, if we take the normal multiple, rather than the 15 times multiple, the normal multiple is about 9.3 times the price to earnings. And what we normally see with most of these insurance companies is this slightly lower price to earnings multiple. Now, if we then take out to the end of 2024, and we're looking at here at about 14 analysts, we're talking about potentially a 180% price, or 180% rate of return. That's assuming prices return to the price to earnings ratio, and of course as well that the analysts have an accurate estimate for earnings. Now that translates into an annualized rate of return of about 70%, so very nice annualized rate of return if we can capture that. Now of course the dividend yield is also 5%, which is good to see. Now if you want to hold this long term, what is this going to look like? And there's a couple of options there. First of all, we can turn to the fast graphs long term growth. There's an estimate here for about 6.8% annual earnings growth over the 5-year period. There's another check as well, looking at Yahoo Finance. I can scroll down here and near the bottom, growth estimates for the next 5 years per annum is a lower 5.3. So I think this is a bit more reasonable for a 5.3% rate of return, earnings growth estimates for the next 5 years. Do the analysts get it right? Well, insurance companies are often quite tricky for the analysts to estimate the earnings for. As we can see here, 1 year forward, most of the time it's a beat, or some of the time it's a beat, some of the time it's a hit, but a lot of the time it is still a miss. Even with the 2 year forward and a 20% margin for error, a lot of the time it is just hitting, but there's still quite a number of times, 1 in 3 times, where it is in fact a miss. So do take that into account. I think that it will be difficult for the analysts to get it right, but I do think that there's a potential here. If you want to hold this and you're going to be collecting a reasonable dividend yield at the current share prices, you are potentially up for some nice rate of return over time. But of course I'm not saying that this is the bottom for the share price, and I'm not saying that this can't go any lower. Okay, so what are we looking at here in terms of fair value? So the analysts are putting it at about $25 to $40 fair value, with a target on average of about 33.7, which is a little bit under the current prices. Different financial models put it anywhere from 22 to 59, so quite a range there. So a high level of uncertainty about what the fair value for this company should be. Potentially, though, I make it as an estimate over 3 models that I think are the more reliable ones here, to be about $38, giving a very small upside here. So I think this is a case where buying Lincoln National Corporation is more of a long-term income appreciation play, and looking for appreciation and capital gains in the share prices. A couple of quick notes here as well. They have been very aggressive in buying back those shares. It is a large, well-known player in the insurance industry. And if they can recover those earnings, they should be able to continue making those dividend payments. Now, a couple of quick points to note here using fast graphs the long-term debt to capital, looking at the sub-industry average, we can sort of see here that generally they've been higher than the sub-industry average, as indicated by those positive blue bars there. So they have had a fair bit of debt, and that's something to take into account as well. Their free cash flow is much higher than the dividend most years, as you can sort of see here by the green bar being much higher than that tiny little purple bar, exceptions being in 2019 and also in 2020 and 2021. So obviously a tough couple of years, and this is where I think the share price could go down substantially still. But if they can get back to normal, I think this is a beautiful cash flow machine. Operating cash flow growth, again, generally positive, except for 2019 again. The share buybacks, as I said, very, very strong management buybacks here of the shares, and that's good for the shareholders as well long term. Now looking at the overall performance here, we can see that they've been increasing since the global financial crisis. They have been increasing those dividends. The rate of increase has slowed down in recent years, but you're talking about strong single-digit dividend increases. Now if you couple the current dividend yield of about 5% with a 5+% dividend increase per year, and I think you're doing well, and this is certainly one that you could own for the long term. So have a look into this. Let me know if Lincoln National is a good insurance company that fits your investment profile and your needs. If you're invested in other insurance companies, do hit me up in the comments below and let me know which ones you're invested in.